Hello, ladies and gentlemen. My name is Greg McCloskey from ForexLive.com. In this video, I'm going to take a quick look at some of the major currency pairs, just to outline the key levels and what we can look forward to going forward. So let's get started. For the euro versus US dollar, I'm going to look at the daily charts, and the price still remains above the swing area between 1.0925 and 1.0943. As long as the price remains above the 25 level, I'm positive on this pair. The next target comes against a 61.8% retracement of 1.0959. Get above that level, and we'll move the risk up to the 1.09438 level for buyers of this currency pair. Let's take a look at the dollar versus yen next. And in this chart, I'm going to look at the daily chart. And if we look at this daily chart, we are testing the low of these swing lows going back to the month of October, and that level comes in at 148.15. Get below that level and opens the door down to these swing lows, which come in at 147.26, and then below that the 100-day moving average. It seems that the dollar yen has turned and is heading lower. There was talk that PIMCO is promoting buying the yen. That means selling the dollar versus yen. Why? Because they look for the Bank of Japan to start to look to raise rates. They haven't raised rates yet, or much, I should say, relative to the other central banks, or tightened policy, I should say, than the other central banks who have been on a tightening path all through 2022 and before. So 2022, 2023. So that is would be bullish for the yen and lead to lower levels. We'll see if it could break below the 148.15 and then look toward the 147.26. Let's take a look at the sterling versus US dollar. And this is the 4-hour chart, and the price has been trading above and below the 100-day moving average over the last 2 bars on this chart. That it's sitting on the fence here for this this currency pair. The level comes in at 1.25059, and the current price is above that at 1.2511. If we're able to stay above and put some air between the 100-day moving average, we could see further momentum, or we should see, or will see further momentum with the getting above the 125.24 to 125.47 swing area. Corresponds with these swing lows and swing highs going back to this period right through here. So get above that level and look toward the 50% retracement at 125.88. Let's take a look at the dollar versus Swiss franc in this currency pair. We're in between the 2 swing areas, and we move down to the high of this swing area, connecting the different swing highs here, moved above it, started to use that level of support, moved below it, tried to use it as resistance, moved above it, used it as support before moving to the upside. That area comes in 0.8805 up to 0.8827, currently trading at 0.88416. In between this swing area and this swing area up here, which also has a number of different swing lows and swing highs between the 88.51. So neutral sellers trying to stay in control. Don't want to see the price move above this swing area with the high near the 0.8866 level. Take a look at the Aussie versus or dollar versus Canada. Dollar versus Canada on the hourly chart. We have support against the 100-hour moving average. We have resistance against a 200-hour moving average. In between sits a swing area. We did come down off of the early North American session highs, move back down to the 100-hour moving average. Found support buyers at 1.37126. Break below that level and below this swing low right through here down 1.3707, and it's more bearish. Right now we're trying to hold support against this level. Need to get back above the 38.2, back above the swing area, and then back above the 200-hour moving average and stay above that level to increase the bullish bias. Let's take a look at the Aussie versus US dollar. This is the 4-hour chart. And what we see on the Aussie versus US dollar is a break above this swing area where a number of different swing lows and swing highs came into play through here, and here. We did break above it last week, but failed. This is a second attempt above this level. We got to put the risk down at the 0.65229 level. As long as the price can remain above that level, we are making this break, and we have a good opportunity to head toward the 200-day moving average, 50% retracement up here at the 0.6582 to 0.6591. Get above the 200-day moving average would be the first time since July 31st. So keep that in mind, folks. That will be a key target on the top side. Finally, we'll take a look at the New Zealand versus US dollar. This is the 4-hour chart for this currency pair. And we broke above the 100-day moving average early in the Asian session and trading here today. Last week, it did move above those levels, as you can see through here. Those were the first breaks going back to this period right through here, which is July. So the price action to the upside failed, and today we moved above it again, but we are falling short of this swing area up here between the 0.6046 to 59. We need to get and stay above that level in order to push this price to the upside. I like the fact that we're above the 38.2% retracement at 0.60166. If we can stay above that level, that would be the best case scenario for the buyers looking for more upside. More conservative risk-focused traders will be focused on the who want to see this price go higher, would want to see the price stay above the 100-day moving average. If it goes below both of those levels, the technical bias starts to wither away. So be aware of those levels on the downside. Absent that, and we could get above this swing area and also move toward the 50% and the 200-day moving average, which come near the 0.6092 level. So that's a look at the New Zealand versus US dollar. So there you have a run through all the major currency pairs. My name is Greg Michalowski. Good fortune with your trading. Bye-bye.